Nedco, Nebraska's largest certified development company and one of the largest certified development companies in the United States. It's August 16th, 2023, and today we're talking about the SOP, or the Standard Operating Procedure, which was recently adopted by Congress concerning the 504 loan and making it much easier. On the show today, we have Will Sailors, our loan officer, Jason Culver, our head of credit, our portfolio manager, Andrew Schnorr, and our engineer. So let's get started on the changes that are going to make things a lot easier. Will, what do you see there?
So the SBA published their new SOP effective on August 1st, and there was a lot of additions in there that made it easier to do 504s, which we were pleased to see. One of them, a new update to the SOP, is the removal of the franchise registry for the SBA. So on any SBA loans, we will no longer have to check a franchise against the approved SBA franchise registry. So if there's an obscure franchise that you have, it's eased up on that a lot. So we don't have to check it on there, and all franchises are eligible moving forward. So that's a nice addition, because if it wasn't on the franchise registry, getting a franchise added to that registry was a little bit of a process. So getting that removed was nice.
This is a big change for the 504 program.
Yeah, that was a nice one. Getting rid of the franchise registry. Also new, effective August 1st, is well, really, the SBA have been working on it since May 12th, but the simplified affiliation rules. And the SBA, they have a long flow chart that will double check everything against. But in summary, if you have a hotel, for example, and then that same borrower owns a restaurant, those are no longer affiliated because they're not within the same NAICS code. So we won't have to collect any documentation on the restaurant, just on the hotel. So if you have serial entrepreneurs who have quite a few entities, we can cut a lot of those out with the review. Don't have to check or collect financials on those. So that was a big change as well.
Well, this is a major change, and oftentimes, Jason, here at Nedco, we do see entrepreneurs that have several different types of businesses that would have different NAICS codes. So this has made it a lot easier and streamlining the 504 program. Your thoughts?
Yeah, it's part of an overall goal. We've been hearing from the SBA that they want to modernize, they want to make the process easier, cut down on the unnecessary paperwork. And this was really an easy change to make. Previously, like you talked about, serial entrepreneur, they've got a restaurant, they've got a hotel, and you're having to collect the documents on all these other businesses they own that have absolutely nothing to do with this project at all. It wasn't the end of the world. It didn't ruin any loans or anything like that, but it just added to what can already be a very lengthy process for some of our borrowers. So the easier we can make it, the more we can cut it down, the better, to really streamline these applications.
Oh, interesting. Jason, what else do you see? What's another item in the SOP change that you see?
Yeah, they're also working on making it easier for what they call character determinations, which would be similar to like a background check. Previously, we'd have to collect information even on something that might have been several years old. Could have been something like a DUI, or maybe they got into a little bit of trouble when they were younger, and it didn't matter how far ago that was. They were going to need to provide us with court documents, and we'd have to provide that to the SBA. They're really cutting down on what they require us to further investigate. So really, unless it's within a narrow band that might include, some financial problems, if you've got a charge that's financially related, that's going to require some investigation. as do felonies. But some of these misdemeanors that we were having to investigate, that process has really been streamlined, so we don't have to go back and collect court documents on those.
Well, this is a big change, and it's going to make it a lot easier for applicants who may have had a little bit of trouble of some sort prior, as you said, to get a 504 loan a lot quicker. So, Will, what else do you see in the new SOP?
So they have those that we listed. Another big long-standing change was we could not do loans to religiously affiliated businesses, and they have now changed that requirement. If a business is affiliated with some type of religion, that's now eligible for financing as long as it is for profit. A lot of those times religiously affiliated businesses will be not for profit, which are not eligible. But if it's a for profit business that just happens to be religiously affiliated, that is now eligible. So they're getting rid of some nice red tape. That's good to see. Cutting down a lot of things and making the financing more accessible to business owners who do need this lower fixed interest rate, especially in the environment that we're in with the prime rate continued to be pumped up by the Fed. So allowing this red tape to be cut gets financing to the borrowers more easily with this red tape gone.
Very interesting. For our viewers and listeners, if you have any other questions concerning the new changes to the SOP and how much easier it is now to get a 504 loan, I would encourage you to contact Jason or Will through our website at nedcoloans.org. All their contact information is there, nedcoloans.org. We're here in Lincoln, Nebraska. We look forward to your call, and these individuals here are national experts in the technicalities of 504 loans. They'd be more than glad to help you. We're going to switch gears here just a little bit for a couple minutes, and we have Jason and Will talk about, we've seen a flurry of activity here at NEDCO just recently in the last couple of weeks. Talk just generically about the projects that are coming in one after another. Jason.
Yeah, we've really seen an uptick in applications recently. I know personally, I'm working on loans to trucking companies, wedding facilities, also have some other projects to, let me think here. Sorry, drawing a blank on some of my other projects. Will, I know you've got quite a few in the pipeline as well.
Yeah, we're seeing some automotive related loans, getting inquiries about meat processing and small manufacturing. So a nice healthy mix here, especially with some of these bigger projects that do need the 504 fixed interest rate, which is significantly lower than the prime rate right now. Because if your bank who's doing the primary financing needs to mark up from the prime rate, that's starting to get really high with what the Fed has done. So right now, loans funding this month in August, the 20-year fixed rate for us is 6.6, and then the 25-year is 6.5. So that really helps.
Let me interrupt you there, Will. So, and what would be the bank, what's the bank rate that you guys are seeing, you and Jason, on the front end of the 504 loans? High as 10?
Yeah, they're starting to get up into double digits. I'll see 9 and 10.
Yeah.
Sometimes, and obviously that's all negotiated between the borrower and the bank. Sometimes they can get that lower if the bank has certain access to capital that not everybody does. But just a standard, anywhere up in that 9-10 range.
Yeah, making the 504 even more desirable, funding in the 6s. Now that's a fixed rate loan for 25 years, 20 years if you choose. Fixed rate now in the 6s as compared to when we partner with a bank in the 10s, high 9s, low 10s, making NEDCO a particularly good deal. And these are fixed rates. They're not variable rates. So if you get a 504 loan here, it's going to be fixed for 20 or 25 years. And one of the features of the 504 loan is that it is an assumable loan with the assumptor having proper credit. So Jason, back to the projects. I know you have a number of event and wedding planning, centers, event centers that have come in lately. Very popular. Why do you think so?
Yeah, I think a lot of that is our local market. There just hasn't been a lot of development in that area for a while, and people are starting to recognize that there is demand and there's just a lack of options. So it's definitely a popular project right now. Like you said, we have several already in the pipeline and other new projects that have approached us about participating in it. And it's like you said, they've got a big real estate need, high cost due to high construction costs right now, and they're looking to mitigate some of that loan by participating with us at a lower interest rate.
Sure. And we're seeing a lot of activity in the manufacturing sector, so important to local economies, so important to state economies. Will, I know you're just not no specifics, but you're working on a rather large manufacturing facility. What do you see?
Yeah, with manufacturing, it's a big objective for the SBA. A critical goal of them is to get SBA financing to small manufacturers to help them out. So that's seeing the manufacturing couple projects going on with that. And one thing to mention is, with manufacturers or anybody getting a 504 loan, if you are concerned a little bit about the rate, we're currently in the mid sixes, which is well below market. But for any 504 loan in the future, if the Fed does cut rates and we do see a drop in these, if they go back to the lower interest rates, 4 or 5%, which we were seeing a few years ago, existing 504s now can be refinanced with the new 504. So so if rates do drop, we can get your rate down with a refi of a new 504. And that was a change a few years ago from the SBA. That was normally not allowed historically, refinancing an existing SBA loan with a new one, but we can do that now. So if rates do go down for some reason, if something happens in the economy or with the Fed, we can get you to a lower rate by refi.
That's a very, very important, critical note. Thank you, Will. And then for the borrowers to know that when rates go down, and they will, they can refinance their loan. So if they're thinking about a project, go ahead and do your project and then catch the rates at a lower rate. Can you make a couple comments on that, Jason? And then we'll wrap up the show today.
Yeah, that definitely was a problem in prior years. And, we've discussed kind of where we think rates might be going. And I think everybody assumes they're going to go down eventually, but the rates can be sticky. And I don't think anybody's expecting them to decrease quite as fast as they increase them. So we are probably looking at rates staying steady or going down slightly. But it is nice to know that if they do drop quite a bit, and this economy has been a little bit unpredictable over the past few years. So if they do drop, that option's out there, and it's definitely something we can help our borrowers with if they're interested in that.
Well, sure, that's great. Well, again, I would encourage our listeners and our viewers to visit our very nice website at www.nedcoloans.org, nedcoloans.org. For Jason and Will and Andrew, if you had a question for Andrew about the portfolio. That concludes the show today for August 16th, 2023. Thanks for viewing.